Thanks for tuning in to this broadcast of The Resilient Advisor. My name is Jay Coulter, and joining me for this live stream and podcast is Lenore Hawkins of Tematica Research, a regular guest. We've really enjoyed having her on this year because, unfortunately for her, she's been stuck in Italy, but for our audience, has given us a great lens into what's happening in Italy. In addition, her thoughts on the macroeconomics going on in this world. Lenore, welcome back.
Thank you. Still stuck in Italy. I mean, you can't really complain because it's not like, oh, Italy, you poor thing. It's so ugly. But it's been a bit much. We're still basically locked in here because most of the rest of the world is kind of like, yeah, we don't want you, including the US right now. The US is like, we don't take people from Italy. Now, technically I can get in because I am an American citizen, but they do a 14-day quarantine and they're not real happy. I kind of need to bring some colleagues with me, and they're Italian, and they can't get in. So no one likes the Italians these days.
How would that work? If you flew into LAX, are you then home quarantined, or do they have a place where they put you up?
No, you have to home quarantine. It's really weird. So what they've done is, and this is, it keeps changing. So as of when I looked this weekend, this was the latest. There's only 11 cities that you can fly into from Europe. So that really, affected the airlines, and most of the flights I would take normally are canceled anyways. The flights that I normally take aren't going to exist until July. But even then, so there's just 11 cities. So it's so strange. Like I have to fly in because my home there's in San Diego. I have to fly into either like Dallas or San Francisco or Seattle. You fly in there, and then the Department of Homeland Security does some check on you to see, okay, you've been in Italy, check your temperature and all that kind of stuff, and grill me on whether or not I'm a threat. And then I get back on a plane and would fly to San Diego, and then I'm supposed to just get home and stay home for 14 days, not leave the house. So that sounds like fun.
I mean, is that even realistic for most people?
No, not really. And there's a lot of fuss going on over here right now in Europe with the UK and Ireland, because they're saying that for everyone, anybody who goes to the UK or Ireland has to quarantine for 14 days. So basically you're saying we don't want tourists, right? Because who can do that?
Yeah.
And you're cutting business. And this is at a really great time for the UK, given that Brexit is coming up. So you've got actually like EasyJet, Ryanair, and British Airways they're filing a lawsuit against the government saying this is just not fair. This is ridiculous. But I don't know, what do you do when we still don't have the ability to test quite that quickly? Although Vienna has sorted this out a bit. If you fly into Vienna, they give you a test that they get the results like within 24 hours. You have to pay for it, but it's not cheap, but it's like $160. And so if you're in the grand scheme of things, that's not a massive amount of money. If you can't afford that, which completely sucks, then you have to do the quarantine. But at least that way you're giving people a choice.
$160 to get out of jail. I think I'd pay that.
Oh God, yeah, I'd pay it in a heartbeat. So it's, the economy still are facing a really significant headwind, and it's just fascinating seeing what the market's doing when there's so many headwinds. Like you think about that and the cost to businesses for something as simple as that, and the businesses that just can't even exist still because you're a hotel. What are you going to do if people have to quarantine for 14 days? Like how many people are going to be showing up and staying in your hotel? Maybe you'll have people from outside of London going to stay in London, but that's about it.
What are you seeing in Italy, boots on the ground right now?
Yeah. So it was interesting. We're in our fourth week of coming out of the lockdowns. And Italy was understandably, the government here was terrified of releasing the lockdown, but the pressure just got so intense because so many companies like, that's it, we're done, we're not coming back, that they got forced to open up. So they planned on opening very slowly, and they've actually accelerated the opening. And in the beginning, you went out and pretty much everyone was wearing a mask. People were really nervous. You could see, everybody's kind of distancing from each other. It is amazing how quickly people adapt. Now, if I go out everyone's wearing a mask, but like half of them have it under their chin, like the whole thing under your chin. I mean, okay, great. Technically you're wearing a mask, but that's not helping anyone. The restaurants, most restaurants are opening up, but just for their outdoor service. A few have a few indoor tables, but not much. And thankfully, where I am in Lake Como, most of the restaurants they have outdoor spaces. I know it doesn't seem like the spacing is as big as you would think it ought to be. But the restaurants understandably pushed back and said the kind of spacing that you want, we're going to go out of business. We can't do it. Shops, you go into shops and you have to have the mask on your face. A lot of them make you put gloves on, or do the hand sanitizer, and they are really stiff about how many can go in. Like if you're going into a little shop, there's that's you, just one person, not even like the person that you're shopping with, they can't come in. It's just one person at a time. But wow. The most amazing one was I finally, thank you, God, got my hair cut. It'd been like 5 months. That's just me. And okay, so talk about expenses to small businesses increasing. I just like step inside and I kind of, no. Because they had this tape on the floor and don't step further than the tape. Okay. And there's no one else in the salon. And it's a salon that could have had like 10 people in it. And there's just me because that's all they can schedule. So I have to stop there. They come running over and they are, shielded up. Like you've got both the mask and like everyone working in there, they've got the full plastic shield, like at the dentist that goes all the way down. They put my purse in a bag, seal it. I'm allowed to have my cell phone, but my cell phone in a bag and seal it. Then they put gloves on me. Then they put 3 plastic sheets around me. Can you imagine how expensive that is and the time? And yet, no, it's fine. V-shaped recovery.
Wait, did they increase the rates that they charge you over there?
Yep. It was about 70 euros more than I normally would pay. And I finally got a doctor's appointment that I needed to go to. Same kind of thing. He's wearing a mask the whole time. I'm wearing a mask the whole time. And that was about 90 euros more. And they actually gave me, when you first go in and you fill out the little form, they had an additional one that said, P.S. extra costs, coronavirus costs. And it itemized them all out and showed me at the bottom. And it was like 90 euros for a visit.
It makes sense. They're going to have to be viable.
What are you going to do? Yeah. Right? Restaurants they're incurring all these extra costs. Like everyone, I'm hard pressed to think of many industries where you actually interact, at least. Maybe if have people working from home answering like customer service calls or something, then you're okay. But very few businesses are not going to have to significantly incur additional costs to handle this. From testing their employees, like Amazon is actually going to start developing internal testing abilities. So they'll have their own lab to test their employees, to all the protections, to spacing people out. So maybe that lowers your protection capacity. Restaurants, retail, you have to have extra things in the shop and fewer potential customers. So costs are up, revenues down. So it's margin squeeze. And yet we have the market having multiples expanding, which, that makes sense.
So to contrast Italy with Atlanta, Georgia.
Yeah.
So this weekend, my son, who's 13, had a baseball tournament. There were 20 teams in the tournament, not one fake mask. Everything was business as usual, full concession stand. And they feigned some protections, but they just weren't there and nobody cared. It's business as usual. So really interesting contrast, but I don't think that's what the whole United States is like, but just here in Georgia.
I've seen the videos and who knows, when you see these things, because social media, everything you see there's real. But you see the videos like in Vegas where it's the same kind of a thing. And then these protests where, some people are wearing masks, but a lot aren't. And you've got people all on top of each other. Now, one of the things that's been amazing in Italy is while, we were so hard hit, and I'm in the region that was the hardest hit. Thank God it was here, not for me personally, but because this region is by far the wealthiest. It's actually one of the wealthiest areas in all of Europe. So if it was going to hit somewhere, hit where people can handle it.
Right.
And it didn't really ever get that far south in Italy, because that's, as you go south, it gets a lot poorer. What people were expecting, we kept getting warned, and everybody was wearing the face masks, was that this thing, we're going to spike up and you got to be really careful. We didn't spike up at all. And the daily case count is just continued to plummet. And now, we're down to less than 200, and it's been kind of averaging around less than 200 for quite a while now. It's been amazing. Now that's Italy. But while the US, like you said, is opening up and everybody's acting like it's business as usual, overall, the coronavirus situation is by no means getting better. We've now hit, if you look at the world news, depending, right? Everybody's got a little bit different numbers, but we're around 7 million confirmed cases. There's been over 400,000 people have died. The US is moving up around over 2 million cases, with over 110,000 people have died. Brazil's skyrocketing. So, and these are parts of Brazil that are really warm. So this whole, it's going to be okay in the summer months really isn't panning out that well. Brazil's got just under 700,000 cases, 38,000 deaths, and Russia's pushing up. It'll hit 500,000 cases soon. Now, what's really got me worried about the U.S. is daily new cases in the U.S. are not declining. They've actually been fairly stable. You look at the 7-day moving average, it's been vacillating between 21,000 and 22,000 new cases every day. And that's still in a country that's really struggling to get the testing up to a level that kind of makes sense, given just that you've got the third largest population in the world. Even more concerning is that you have 21 states where the number of daily cases is continuing to rise. So we're coming out of this lockdown, which I find is just, trust me, it's not like I liked the lockdown. The lockdown, particularly like in Italy, the lockdown was it was a panic, because we didn't know what the hell we were dealing with. We still don't really know what the hell we're dealing with this virus, but it was a panic and we didn't know how bad it was. And we had, I can tell you that a lot of us here in Italy, since we were the first Western country to get really hit hard, we were legit sitting at home thinking, am I going to die? Like, is that, because we didn't know how bad this was. And the images and the stories we were hearing were just terrifying. But in the US right now, you've got 21 states are seeing cases on the rise as we're opening up. 20 states are seeing falling, and 11 are unchanged. So what was that lockdown all about? Now, a lot of the lockdown was really about increasing the hospital capacity, because it's not, this whole thing when people keep talking about the mortality rates, how dangerous this thing is. It's not really the mortality rates that are concerning. It's overwhelming the hospital system. So that was all flattening the curve, is to slow that down so you don't have hospitals overwhelmed, so that if you, trip and hurt yourself, you can go to the hospital and get treated because they're not swamped with coronavirus cases. So the U.S. is not out of the woods, but they're opening up, but they're still closed to Europe for the most part, and that's, I think, something that's probably going to continue. We look at those nations that did a really good job handling it, like Singapore, South Korea, Japan, that were doing a bit better than kind of the Western world did. They're seeing resurgences, right? Not right this second, but they've seen spikes and resurgences. So this thing is complicated. It's not easy to get rid of. It's going to be with us for a long time, and we still don't, vaccines are a ways off, treatments still going to take a bit. So it's going to be interesting.
Well, Lenore, as we were talking before we started this broadcast, we started this year by almost going to war with Iran. Then we all got locked into our houses with coronavirus, and now we have peaceful protests and unpeaceful riots in the United States. The stock market's going up. Let's take a step back and use your macroeconomic lens.
Yeah.
What do you see? What do we need to be paying attention to?
Okay, so when you look at what's going on with the market, it is actually, it's amazing to see what's going on. But it does really make sense if you don't look at just the coronavirus and just the economic lockdowns. You look at what the responses that have been to that. So just last week alone, we had an additional $5 trillion in stimulus announced between Japan, China, Korea, Europe, and the US. And today we've got more stimulus that the EU is talking about delivering. So we've had a lot. And in the US, if you look at the stimulus that has already occurred, both monetary and fiscal, and what's in the works, you're getting more stimulus than the overall economic loss. So it's not actually that surprising that the market is responding that well, because that's one of the factors that's doing it. But if we put this kind of into context, if we look at, say, retail stocks, right? Retail stocks are up, depending on which kind of metrics you look at, they're up between 40 and 50% from the lows. And a lot of them are hitting new all-time highs. I mean, that seems kind of amazing to me. Let me see, which one do you have there? That's the Fidelity.
The Fidelity Select Retail total return up 52%.
Yeah. I mean, wow. That's amazing. It's amazing to pop up when, particularly like you're saying, we have the protests going on. I mean, we've all seen the images. New York still boarded up. Where my home is in San Diego, friends were sending me pictures. I mean, we're talking Del Mar. Like, it's so sleepy. It's a sleepy little suburban area. And the bunch of the stores were boarded up as well there. I mean, they had protests. They were all totally peaceful. Nobody broke anything, thankfully. But the shops there were all boarded up. So these are shops that have been boarded up for months, and then they open up, and now they're boarded again. And yet, look at what retail stocks are doing. So that doesn't make a whole lot of sense. I think if we can look at the MSCI World Retailing Index, because this looks kind of a bigger picture. That's up over 50%. I mean, that's amazing. Now, to put it in context, during the financial crisis in 2007 and 2008, that index fell right around 50% between 2007 and 2008. And today it's way back up. I mean, and yet we've got unemployment situation we've never seen before. We've got economy slowing at levels we've never seen before. And the economy keeps going up. But I mean, one of the things you can look at is the entire system is just simply, it's swamped with money with all of this stimulus, particularly a lot with what the Fed's doing. So we looked at April and what the stimulus it was in April, and you had basically for every dollar that was lost in wages and salaries, there was about a 4-to-1 covering by government stimulus checks. Okay, so talk about exactly like swamped with money. And then I read over the weekend a Wall Street Journal analysis that looked at the people who are unemployed, kind of lower paid unemployed. They're making more money today than they did before the virus hit.
Yep.
So, I mean, not that I don't want anybody suffering, but damn, that's okay. So that's a really interesting dynamic. And I think, we've all been talking about when this thing hit and we were seeing such massive job loss and such sudden enormous financial shocks. And we were talking about the Great Depression, right, from the 30s, and how, because you had such a massive hit to the stock market and then this really brutal economy. Those analyses are completely out the window at this point, because we never saw anything like this then. You didn't see when you were unemployed and you couldn't find a job, you weren't eating. I mean, the struggles through that. Now, if you're unemployed and you can't find a job, we have more time, so you're happier, and you're making more money than you did back in January when you were working. So anybody who tells you that, this is how this is going to pan out, you cannot. We've never seen anything like this. We've never had such an enormous economic shock that was then papered over by stimulus. What we do know is that stimulus eventually costs you. And we do know that what happened in the financial crisis in 07 and 08, that stimulus, what it cost us was this very, very slow growth in the following decade. The stimulus we're seeing now utterly dwarfs anything that was done then. So that, how bad does that mean? And that kind of goes to one of the things to think about is, we say this world, the world is so awash in money. So that naturally leads you to think inflation. It's going to be really hard to get inflation going when 1 out of every 4 Americans doesn't have a job. When you've got this much slack in the system, like the capacity is so much greater than what we're actually doing, you can't really get inflation going with that. And by inflation, I mean like a rise in prices across the board, not to say that you can't see spikes here and there in certain areas.
Yeah, I've always felt since the financial crisis that we did see inflation in things that required debt or government subsidies because there was more money chasing it. And when I help advisors build a framework for their portfolio construction methodology, we look at what I call the 4 corners or 4 outcomes. So we could have economic growth or contraction. We can have inflationary growth or contraction. And to account for all 4 of those potential outcomes with a skew based upon what you believe. And everybody who's had a big skew towards inflation in their investment portfolios, it hasn't really paid off for them. But if you model the 1970s as a potential outcome, where in the beginning of the decade, we went off the gold standard, we saw massive inflation, CPI outpaced both stocks and bonds. So it didn't matter what your allocation was, you lost. That has implications for the advisors who watch this show as they're building portfolios. What are your thoughts on what they should be paying attention to from a macroeconomic perspective to be on the lookout for inflation? Because CPI just doesn't get it done.
Yeah, no, CPI really doesn't get it done. Watch the bond market. The bond market knows what's going on. The equity market is really much more momentum. The equity market has just so dislocated itself from any kind of fundamentals. I think it's reasonable and rational that it has done that. Sounds weird to say, but we've been taught over the past decade, basically, that the Fed has become such a economic and policy yardstick that the government is going to do everything it can to keep a floor under the market, no matter what happens in the economy. And they're going to keep trying to skyrocket it when things are good. So it makes sense. Like anybody who, if you looked at things and said, oh my God, the world's going to hell, we got to protect ourselves, you got killed. And that's been happening year after year after year. It's much like what we saw in the financial crisis. The Fed bailed out banks that had behaved incredibly irresponsibly. And those shareholders of banks who had behaved responsibly ended up being harmed because the shareholders of banks that were really irresponsible got bailed out and they didn't pay the price for anything. So it's kind of, the moral hazard there. Well, we're seeing the same thing here where corporations have been issuing bonds for, over 10 years now. And they've been issuing a lot of junk bonds. And, the credit rating continues to go down. They keep issuing bonds and then they buy back their shares. And that should not be a good thing for investors because that's not good. Destroying your balance sheet is not good, except
generally
it was good because the Feds bailed out junk bonds. So those guys got rewarded. And the companies that didn't do this, that didn't lower their credit ratings, right? That didn't just keep issuing so much debt and buying back their shares. Well, those should be the ones, those who behave responsibly and are good stewards of their company's balance sheet should get rewarded when times get tough. And those who aren't should get punished because that's how you incentivize people to do smart and healthy things. Well, that's gone. So markets, of course, going to keep going up. What's, I think, interesting is even if we get, so you're saying going forward, even if we get a V-shaped recovery, which I still think is highly unlikely, but it's so difficult right now to, how do we map what's going to happen with this pandemic? I mean, at this point, we still don't really understand the virus. The virologists still don't understand the virus. Like, you get so many different opinions on it. We had a big to-do here in Italy because one of the leading virologists here, he came out and said that he thinks that the virus is weakening, which I have no idea what I'm talking about here. I'm just talking about what I read. Apparently, this is something that's a known thing that can happen if a virus is too successful and it ends up infecting so much of the population and harming its hosts so much, it'll kind of dial it back because it's too successful. Like you don't want to kill people. You don't want to wipe them out if you're a virus, because you only live if your host lives. You want to reproduce, and viruses reproduce at such a fast rate. So like a week for them, I've read, is like millions of years in human evolution, just because they reproduce. Well, they don't really reproduce. I mean, they inject their DNA, but because their life cycle is so different from ours. And this guy was saying it was weakening, and then everybody else was like, no, or a bunch of other people said, no, it's not that. Our treatments were getting so much more sophisticated. We're identifying it. So we don't know how long it lasts on surfaces. Depends on who you ask. We don't know if there's any kind of a seasonal aspect to it. Depends on who you ask, right? So how do we know what the economic impact is going to be? But even if let's say we do get that V-shaped recovery, we're still stuck in a deflationary pricing situation. Because like I said, you've got like one in every 5 Americans is either unemployed or underemployed. There's so much idle capacity. When you look at the 70s and what happened there with inflation, was you had the baby boomers getting into the time of their life where they start spending the most. Like when you hit those 30s and 40s, you're buying houses, you're having kids, you're buying stuff for your kids, you're upgrading your cars, you're getting married. I mean, there's just a lot of spending that goes on there. And you had women entering the workforce, so the workforce overall. So you had the biggest demographic going into the spending years, and then you had the workforce expanding because women joined in. So you had kind of a demand shock to the system where you had more people wanting to buy more, and we didn't have much debt before that. Not comparatively. We didn't, on corporations and all that. Yeah, I mean, it was a completely different situation than it is today. So we just started building capacity, and it was just kind of a party because you had so much demand that caused the inflation. And then you had that the debt was so high, right? And then the interest rate. And then interest rates just kept falling. And so you could borrow. And it was a great game because you could keep borrowing. And if you borrowed, you could borrow later to pay off that first borrow at a lower rate because the interest rates keep falling. Right. So we built up all this capacity. This situation is completely different. You've got the U.S. labor force is barely growing. Our population is barely growing. You're not going to get that demand shock overall. Plus, you've got all that excess capacity. So I don't see how we're possibly going to get any sort of inflation.
Interesting. Lenore, I've kept you over our 20-minute spot, as we always do. Do you have any final thoughts before we wrap up this broadcast?
Yeah, there's one thing. Okay, so there's because the bond market is always where you look to see what's most likely going to be going on in the economy, and bond yields keep going. I mean, they're not going up much. I mean, they fluctuate, but they're still unbelievably low. I mean, the 10-year is just trying to push up to 1. It was like 3.2% about 18 months ago, and it's still unbelievably low. But one of the things I was looking at today is the triple B rated munis that they have. If you look at triple B rated munis and you look at what like the default likelihood is on those, so those are the municipal bonds, and then you look at corporate bonds, like A rated corporate bonds, the munis right now, the yields that they're generating are just too high given what's likely the default rate, especially if we get the stimulus that very highly looks like it's coming, the stimulus from the federal government to help out the local governments, right? Because they're going to be hit hard. Munis got hit because you're going to have lower tax revenue, you're going to have lower sales tax revenue, property taxes, all that. So munis have been going to get hit, but it looks like the government's really going to step in there and help them out. So I think there's an interesting thing there that our investors might want to look at, that they are not being priced right now very, very accurately. They are cheaper than they ought to be.
Interesting. Lenore, thank you so much for coming on the podcast. It's always great having you, not just your perspective on Italy, but on macroeconomic events.
Thanks. You have a great week.